Alright, this is Tuesday morning, 6th of October. Recording this at 7:30 a.m. in the morning. And in this morning I'm going to look at the British pound versus the Aussie dollar. And as we look across our heat maps, you can see that the British pound versus the Aussie dollar is in a pretty much of a bearish trend. The weekly trend's not so much bearish, but the daily and 4-hour trends are pretty bearish. Kind of mixed here on our 3-day report, and then on the intraday kind of mixed as well. So let's look at that pair and just see what's going on there. Going to look at our daily and 4-hour charts as we usually do. Move this over just a bit so we can see everything. So starting on the left panel over here, if we look at the left panel, we can see that price has moved below the daily Kumo, so therefore that daily and 4-hour trend is negative, as I mentioned. If we flip over here to the right side, we can see our 4-hour Copic curve has been moving down since this point right in here with price. So price came up, tested the 4-hour 16-hour Kumo combination up in here, found resistance in that area, and we moved back down. Our daily Copic curve is also negative, so this 4-hour Copic curve or rate of change is occurring within the context of this bearish daily rate of change as well. Now you can see here on the 4-hour chart, this middle panel, that we have had a little bit of a bounce here on price. And one of the reasons I've mentioned this pair this morning is that a lot of pairs have been in a period of consolidation and have not offered a whole lot of pip gain in terms of intraday trades. Some of the ones I've been pointing out lately related to the Swiss franc, the New Zealand dollar, for example, have been fairly tight movements. Another pair that's been very tight is the euro versus the pound, for example. So this pair, the British pound versus the Aussie, offers a little bit more volatility and therefore a little bit more opportunity if you are a day trader. Now currently, as I mentioned, we have had a push back up here on the 4-hour chart, so this is setting up for a possible retracement back down, in my opinion. As long as both of these Copic curves, the daily and the 4-hour, are showing bearish divergence, then this price action here on the 4-hour chart is simply a retracement. Now if that continues, then that 4-hour Copic curve will eventually flip, and looking at that as a short would not be the appropriate time to do that. So how far up we'll go, don't know, but we're into some areas of possible overhead resistance. We can look at this in a couple of different ways. We can draw a couple of different fib lines. For example, we can draw the fib line from this Copic curve marker that's up in here, and doing that we would pull a fib line down to here, and we're obviously still far below our 23% fib line, so nothing, that bearish trend is still intact there. We can also draw one, however, from our 4-hour Copic curve, which would be pulling from this point in here. So let's do that, and then we'll color those Fibonacci lines a little bit different color. So we pull down in there, and then color this one orange. And based on that fib sequence, you can see that we're just about up to the 23% fib line right in here. Not quite there, but if price comes up into that area, that might be an area to consider some shorts. The next area, if we get up that far, would be the tangled mess of overhead resistance up in here, which is in this area right in here. Right in here we have even more overhead resistance in the pivot line, the 23% fib line based on this fib sequence, and the 38% fib line based on this fib sequence. So those are two possible areas of entry areas. First one again is right around 2.1372. The next one is right around 2.1436. So I hope that analysis helps you with your trading today. No guarantee, of course, it will get up that high on either one of those levels, but that's a pair I'm watching this morning.